Hello, everyone. So one of the strategies that I wanted to share with you about, taxes, making the most out of your financial well-being through also looking at the tax side of things, is something that some people call income shifting. Finding ways that you can count your income differently or your expenses differently that can lead to greater deductions and ultimately for you to have a lower tax liability. Now, one of those strategies, this would apply if you're a sole proprietor or if you're an LLC, is related more to your medical expenses. So to start off, this is about how to hire your spouse to save on your taxes and get some more benefits. Okay, why hire your spouse? So you usually can't deduct your medical expenses unless you're spending more than 7.5% of your adjusted gross income or AGI on medical. And then if you choose to itemize deductions. Now, even if you were spending more than 7.5% of your AGI, it might not be totally advantageous for you to take itemized deductions. Your standard deduction might still be higher than that. It all depends on your aggregate. If you're able to take other itemized deductions in addition to your medical expenses, it's all case by case. But really, this really limits your ability to, deduct medical expenses. Now, with this method, you can deduct your medical. How does it work? Self-employed individuals can't be covered under a self-insured medical plan. However, you could hire your spouse and elect family coverage at that point. In that way, you would cover all your family, including yourself as the other spouse and your children. Now, another way you could do it is form a C corporation and then set it up. Now, why do I say C corporation? Because if you are an S corporation or a partnership, this strategy likely won't benefit you because the reimbursements from the medical plan is still going to be counted as income in those situations. Now, how to do it? If you're a sole proprietor or an LLC, you would hire your spouse, then have someone draft you a self-insured medical reimbursement plan. When you pay your medical provider, you could do so directly at that point or reimburse your family for the expenses. Now, when I say directly, that means from your business card, coming through into your business bank account. You must keep the plan for at least 3 years. That's part of the deal with this. Now, what more to know? The plan can be as comprehensive or as basic as you want. So the cool part about this is that you can really cover the holes in, let's say you have a regular insurance, such as deductibles, co-insurance, dental, pre-existing conditions, non-traditional medicine, such as acupuncture and chiropractic, which I really love. I'm into all the alternative areas, alternative perspectives. A lot of the times, your regular medical insurance won't cover that. Now, this is subject to reasonable compensation, meaning the total payout under the plan must be reasonable for work performed. So basically, there would be an upper limit based on what the employee, in this case, let's say you've hired your spouse. So based on the work performed, the medical reimbursement plan can exceed that kind of expectation about the work being done. Some of the requirements: you must cover all the full-time employees, however, not the part-time ones. So if they're lesser than 25 hours of work a week, you don't have to cover them. Only the full-time employees. And that's practically it. So this is just one strategy. This was really short, but it's really something that you might want to start considering. I'm gonna start to do a little more on income shifting and finding these areas where you can really start to count money or let's say count your income, or start to count some expenses that previously weren't deductible, how to shift things around so that you can make them deductible. So again, this is Alan Matei. Thank you so much for watching this. And yeah, if you have any questions, feel free to reach out to me. Thank you.